Welcome to the Trend Market Update Report for October 2011. Nothing really spectacular happened in October. Sales units were 6% higher than last year, but when you consider how slow the market was a year ago after the expiration of the tax credit, we really should be running about 20% above last year. So October sales were actually a little bit disappointing. The pending sales were 10% ahead of last year. A little bit better, but still not in a 20% range that we would hope for. Prices, though, have remained very stable over the last 6 or 7 months. We're 4% below last year, but that's been true for the last 6 or 7 months. Actually, last October, we saw a very high inventory that we were carrying, and we were concerned about some price erosion. And in fact, some price erosion did occur in the fourth quarter, primarily in the fourth quarter of last year and the first quarter of this year. Since then, though, prices appear to have stabilized, and we've been running about 4% below last year in prices. Right now, inventory has come back in line. It's about 7% lower than it was at the end of October last year. So we're not seeing that as influencing any further price erosion in the next few months or even into early 2012. One of the things that we haven't talked about over the last few months is distressed sales, and right now you're hearing on national news quite a bit about distressed sales. Actually, distressed sales nationally are down this year compared to last year, but there's been a lot of reports of concern that they're going to begin to really grow again. We haven't experienced that in our region. In fact, both bank-owned properties and short sales are within 2% year-to-date of where they were last year. So we haven't seen a big reduction, but we also haven't seen any kind of increase at all in terms of any of our distressed sales. The REOs, bank-owned properties, constantly month after month are coming in between 400 and 500 and 550 a month in terms of closed transactions. And the short sales are always 5.5% to 6.5% of closed sales. There is a little bit of concern that in New Jersey there may be some more foreclosures coming along. We haven't seen it yet in terms of our inventory. The bloated inventory that we saw a year ago, by the way, was not really the result of a whole wave of REOs hitting the marketplace. It was really a result of homes that were on the market during the tax credit while the tax credit was in effect, and then we saw sales activity drop off so dramatically that we ended up with inventory building. This year, as I said, we're back in line with our inventory, and we're not expecting to see too much price erosion or any price erosion really over the next few months into early 2012. That's it for the October report, and for individual counties, again, be sure to visit the homepage, look at the market history report, market snapshot for individual county reports. Thanks for joining us, and we'll be back again next month.